while most investors panic when the market turns volatile and headlines warn of economic uncertainty. Billionaire investor Warren Buffett is quietly adding high-quality stocks to his portfolio, positioning for long-term growth. Today, we're breaking down the exact companies he is buying right now, their portfolio percentages, dividend yields, and the reasoning behind each investment. And stick around because the third stock has been held for more than 30 years, yet it still surprises many investors with its performance. Can you guess which one it is? Keep watching. First, let's set the market context. The stock market has recently seen volatility with interest rate concerns, inflation chatter, and economic slowdown fears. Many retail investors react emotionally, selling high-quality businesses during temporary dips, but Buffett thrives in uncertainty, using these moments to buy companies with strong fundamentals. This is why so many investors closely watch his moves. Who is Warren Buffett? He is the chairman and CEO of Berkshire Hathaway, a holding company managing a portfolio exceeding $350 billion. Berkshire invests across sectors like insurance, energy, banking, consumer goods, and technology. Buffett's approach is simple but powerful. Identify businesses with durable competitive advantages, solid cash flow, and long-term growth potential, and hold them for decades. Quarterly filings reveal both new purchases and the size of existing holdings, giving investors insight into how smart money operates. Before we continue, a quick disclaimer. This video is for educational purposes only and is not financial advice. Always do your own research and consider your personal risk tolerance before making any investment decisions. Let's start with Buffett's largest holding, Apple Inc. Apple represents roughly 45% of Berkshire Hathaway's equity portfolio. Buffett first bought Apple shares, recognizing it as a global consumer brand rather than just a tech company. Its ecosystem of iPhones, iPads, Macs, and services generates billions in free cash flow annually. Apple also returns cash to shareholders through buybacks and dividends. Apple demonstrates a key Buffett lesson: buy companies with predictable revenue and strong customer loyalty. Mini takeaway: consistent cash generation and brand strength are the foundations of Buffett's compounding strategy. From technology to banking, Buffett diversifies across sectors. His next major holding is Bank of America, which makes up about 11% of Berkshire's equity portfolio. He owns over 1 billion shares, reflecting his confidence in the long-term strength of the U.S. financial system. Bank of America remains profitable even during economic uncertainty, with revenue from lending, deposits, wealth management, and investment services. Its dividend yield is approximately 2.4%, providing a reliable income stream. Visual cue: display Bank of America ticker. Overlay recent Berkshire purchases and dividend info. Engagement hook: can you guess how much Buffett increased his stake this quarter? Keep watching for the answer. Mini CTA: if you're enjoying this breakdown, hit like so more investors see it. Buffett's Bank of America investment shows the importance of stability and management quality. He invests where cash flow is predictable and growth is sustainable. Mini takeaway: consistent earnings matter more than chasing hype or short-term gains. Finally, let's move to a classic Buffett holding. Buffett has held Coca-Cola for over 30 years. It makes up roughly 9% of Berkshire's portfolio. The company's global distribution network and brand recognition generate billions in stable revenue each year. Its dividend yield is approximately 3.1%, providing Berkshire with a steady income stream. Visual cue: show Coca-Cola global sales map, ticker, and dividend overlay. Transitioning smoothly, notice the pattern. Apple, Bank of America, and Coca-Cola all dominate their sectors, generate consistent cash flow, and maintain competitive advantages. Buffett's strategy isn't random. It focuses on companies that sustain value over decades. Midway key lesson: all three companies generate cash consistently, which is exactly what Buffett looks for. Here's a fun question. If you had to pick one of these three to hold for the next 20 years, which would you choose and why? Comment below, we read every response. Mini CTA: share this video with someone who wants to learn Buffett's investment principles. To add more context, visual cue: show a small animated chart of Berkshire Hathaway's total portfolio distribution by sector. You'll see tech, banking, consumer goods, and energy all have weightings that reflect diversification with a bias toward high-quality businesses. This reinforces Buffett's philosophy of spreading risk while focusing on durable companies. Beyond individual stock analysis, Buffett's portfolio teaches several essential lessons. First, buy strong businesses with competitive advantages. Second, hold long-term, ignoring short-term noise. Third, focus on cash flow and dividends, not just price movements. Visual cue: chart comparing Apple, Bank of America, and Coca-Cola dividends and 10-year stock performance. Break this into 2 sentences for narration. Notice how each company provides steady cash returns and long-term growth. This is Buffett's approach in action. Quick recap: Apple exemplifies tech innovation and brand loyalty. Bank of America reflects financial stability and dividends. Coca-Cola demonstrates timeless consumer demand. Together, they illustrate Buffett's formula for sustainable wealth creation. Mid-video teaser: in our next video, we'll analyze Buffett's hidden stock picks under $10. Stay tuned for those surprising opportunities. Remember, Investing like Buffett is about patience, discipline, and focusing on fundamentals. Daily market swings are far less important than selecting strong businesses and letting compounding work over years. Always align investments with your financial goals and risk tolerance. If you found this analysis helpful, subscribe for more billionaire portfolio breakdowns, smart money strategies, and high-potential stock insights. Hit the bell icon to never miss an update and learn how to think like Warren Buffett in your own investing journey.